Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 14th of June. So I've seen another really good week of volatility in the currencies and a new high on the S&P 500 again. So let's jump into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and you can see here we've had a perfect range week where it literally touched all of our boundaries in the one week, really. We can see here on Monday, we started out at the effectively 65.80, which is the zone that we know is very strong support. You can see that we had resistance right through there, and all of this action right through here helped this bolster this level. Exploded up there and all the way to our target above again at 66.80. So really that 100 pip movement has played out so many times over the last few weeks. It's been really a trading bonanza. So hopefully you're able to get involved in that. Again, though, you're taking your profit at the tops, of course. So really, while it's staying inside this range, it makes for very, very easy trading. So hopefully you're able to take advantage of that. Right now, we're finding ourselves sitting on the 20 moving average. If we get a series of higher highs and higher lows on a smaller time frame early in the week, we'd look for testing the highs again at 66.80. Look, it will break eventually, but there's no point in trading it until it does. It's a lot easier to jump in once it's done that, and then we look for the new highs. But of course, if it fails there, we look for trades back down to that 66 cent mark or the 65.80, which is the secondary zone right through here. Both have been touched most recently, so it's pretty easy and straightforward trading. But we're in the middle of the zone at the moment, sitting on the 20 moving average. So really, it's just a case of trading in the direction of the smaller time frame trend. Over to the US dollar CAD, and you can see here we've had another good range of movement as well. Big bounce off the 20 moving average, went all the way up to that 37. I think it reached 37.80. 137.80 is probably the target there. You can see that's where all the highs are. It's reached it several times. The market is really playing the game in terms of testing technical levels at the moment. So really, the charts are very, very easy to determine where you take profit and stop losses need to be. This was no exception, bounced straight off the 20 moving average. We know we came off a very good base here, tested the 20 moving average on the way up, and then off straight up to that 137.80. So again, it came back down and tested the 20 moving average and this resistance from above. So really what you're looking for here is a series of higher highs and higher lows on a smaller time frame, something like the 1 hour or even the 4 hour. And if we get that, then we're looking for moves back up to the previous high and a break of that level. Then we go to the secondary high at 138.50. So both levels are certainly in play, and it is in a technical uptrend at the moment. We've got a series of higher highs and higher lows on the daily, and it is resting on the 20 moving average. So given that we've got that information, if we see a series of higher highs and higher lows kick off from this level, pretty easy target to aim for in the first instance, about 80 pips up on the way up, and then an extra 70 pips if we get a break of that level, but it is a separate trade at that point. Nothing short of a break below 136.80 would convince me to do anything but long on the CAD. If we get that, then we're looking for shorting opportunities back down to 136. All right, over to the US dollar yen, and yeah, this has been strong this week. You can see we had a good bounce off the 50 from last week. It's trading above the 20 moving average, tried to break down again and is still definitely staying up above it. 157 is proving to be, look, 157.50 really is proving to be a very, very strong zone now. We have got a lot of divergence here though, so you've got to be really mindful of that, and that's going to come when you've got flatness happening in the market. You can see that we've got quite a bit of MACD divergence, and you can see that really struggling to make new highs at the moment, but it is staying above the 20 moving average. So it's quite a difficult one to trade at the moment because you've got resistance right in front of you. Even if you got in, it is definitely at resistance, so it's going to make it hard to get in without feeling pressure straight away. A break under the 20 moving average, however, and we'd be looking for moves back down to that sort of 154.80 to 155 level. So really it's just a bit of a zone. You've got your top line here at 157 sort of 50. I'll pop a line there. That's our heavy resistance zone. You can see that it's slightly higher. keep an eye on that. If it gets above that level, then we look for a series of high highs and high lows above it and maybe test the absolute high that we can see here. But other than that, if it starts to roll over, trade between, if you want to scalp it, trade between the 20 moving average and that resistance line up there. And that's going to be your scalping opportunities, a daily close above or a daily close below the 20 moving average. And then we change our targets down to 154.80 for the short and basically 160 for the long move. All right, US dollar yen, dollar index, sorry. Dollar index has been a really, really wacky one this week. Look, it exploded last week. We found the big move up to 105, basically nearly 50, which is what we wanted. Then it came back all the way down and tested the 104.30, and that was on news, of course. And now we're finding ourselves back above 105.20. We know 105.20 is a very, very strong zone, and it's managing to trade above it. The session's finished now, so realistically, we know we're above the level that we need to be for support. I would be keeping an eye on the moves. As long as we're staying above the 20 moving average and above this level here, I would be comfortable. The US dollar strength is still in play, and if we get a bit of a break above that 105.50 level, I think it really opens itself back up again to that 146.50, which is going to be pretty detrimental to the euro, which would go to now. So the euro obviously fairly short. You can see, look, we had MACD divergence here. There was no question about that. It's broken down below all of the levels, down below the moving averages. Now it had a bit of a retest of that 20 and 50 moving average and the resistance line at 108, but it sold off very aggressively in the last session, as you can see, and MACD has gone into negative territory for the first time in a little bit. So really, I think the target is probably still the 107 on this one. I know we're trading pretty close to that, but I'd be just looking for smaller highs or lower lows and lower highs on a smaller time frame. And if we get that, I think that would be the ideal move down to here. We'd reassess certainly at this point here. That's probably about a 105, 50 to 60 on the dollar index. But this is what we're looking for, really. If we get a move down to that level, then we look for potential moves up to the 20 moving average from below. But until then, I think I would be probably trading this little pocket here, down to the 107, and then back up to around that 108 area or 107.80, depending on where the moving average is. But it's done exactly what we probably expected it to do when we saw that dollar index strength. So hopefully you were able to take advantage of that. Really good volatility there as well. And the S&P 500, all-time high again. You can see this week, it's had a very, very big week again. Basically positive all the way through. It liked the data that came out. So really, it's one of those ones that it hasn't really changed in how we would trade it. I would be looking for roll reversal zones to basically play an effect, which is around that sort of this level here. Now I'll pop a line there. All of these levels are proven to be roll reversal zones. So that's what you're going to be aiming for on the short. So any sign of roll reversal, so you see a series of lower highs and lower lows on a significant time frame, like a 1 hour or a 4 hour, I'd be looking at trading down to the 20 moving average and around that sort of, call it 53.30 there, and then the very important 52.50 and of course the 51.80, all very, very important zones. Not really interested in participating in the long right now. I think I'd rather let that play out and then just look for opportunities to get back in, but at a good level. So when it does roll over, look for a potential trade down to these levels. And then at these levels, watch out for a reversal. And if you do get a reversal, that's when you jump in and look for the previous long, because they're the easiest targets to get to. But yeah, really good trading on this one. If you did take the long off the 20 moving average, it was a very easy trade to the previous high, but now it's made a new set. So we're really waiting for that cycle to happen again. So I hope you had a great week's trading. It's been a really, really big week, a lot of volatility. Have a fantastic weekend, and I look forward to seeing you all next week.